Most people think you need 20% down to buy a house in California. That's not true, and thinking that might be keeping you out of a home you could already afford. I'm Michael DiVita, independent mortgage broker in California. I've been getting people into homes since 2007. Today I'm walking you through every down payment option available right now. If you're a first-time home buyer, you can put down as little as 3% on a conventional loan. That's a Fannie Mae or Freddie Mac loan, not FHA. On a $600,000 home, 3% is $18,000. That's it. You do need at least a 620 credit score, and you'll pay PMI, private mortgage insurance, until you hit 20% equity. But PMI is cancelable. Unlike FHA, you don't pay it forever. A first-time buyer in the mortgage world means you haven't owned a home in the last 3 years, so even if you owned before, you may still qualify. Next is FHA. On the same $600,000 home, that's $21,000 down, or 3.5%. FHA loan limits in California's high-cost counties, Marin, San Francisco, LA, go up to $1,209,750 in 2026. So FHA works for most California buyers. The downside, FHA has mortgage insurance that sticks for the life of the loan if you put less than 10% down. You'd need to refinance to get rid of it. Still, if you need flexibility on credit or income, FHA is often the right call. If saving even 3% feels like a stretch, California has programs that can cover your entire down payment. CalHFA, the California Housing Finance Agency, offers the My Home Assistance Program, a zero-interest deferred loan that covers your down payment and closing costs. You don't pay it back until you sell or refinance. There's also the Dream for All program, a shared appreciation loan that gives you up to 20% down. In exchange, CalHFA gets a cut of your appreciation when you sell. It's competitive, they've run it as a lottery, but when it's funded, it's a real option. Income limits apply, and you need at least a 660 credit score for most CalHFA programs. For a lot of buyers, this makes homeownership actually happen. Now let's talk about the 80-10-10 strategy. This is for buyers who want to avoid jumbo loan territory or eliminate PMI without a full 20% down. It works like this: an 80% first mortgage, which stays conforming for a better rate, a 10% second mortgage, and 10% from you as down payment. On a $900,000 home, your first loan is $720,000. Your second is $90,000. You put down $90,000. No PMI, no jumbo pricing. The second mortgage has a higher rate, but the combined payment is often better than a single jumbo loan with PMI. And for higher-end properties, think Bay Area, Marin, Coastal LA, I have access to jumbo loan programs that go up to 90% loan to value. That means 10% down on a $1.5 million home with one clean loan, no second mortgage, no complicated structure. Not every lender offers this. You need strong credit, reserves, and income to qualify. But if that describes you, it changes the math entirely. The right option depends on your credit, income, and the home price. Call or text me at 1-8002-391103. I'll run the numbers for your situation for free, no obligation. Visit us at mycahomeloan.com.